What's going on YouTube? Welcome to another episode of Money with Manny 101. On this episode, which is a follow-on from the previous episode of Investing 101, we're going to cover dividend yield. If you did not watch the previous video, which I will tag above, please make sure you go back and do so. What we're going to do essentially is invest $100 twice a month, and I'm going to make a video showing what stocks I'm going to buy. The reason why I'm going to cover dividends and dividend yields is because I'm going to create a dividend heavy portfolio essentially. I'm going for the long run, so I figured I'd get into stocks that will pay me for holding the shares. With that being said, stick to the end. On the second portion of this video, I'll show you the stocks that I went into and the ones that I bought into. So far we have about $250 into the account, so it's not going to be much, but let's get started here. A dividend is essentially pretty simple. It's a payment shareholders receive from a company's earning. Essentially, when a company has their earning and they have way more than they need to essentially grow the company, they could choose to reinvest it into the company for growth or pay out dividends. Now, there are companies that pay out dividends consistently, and there are ones that they pay out dividends to attract you into buying. That way, once you're a shareholder, they have more investment into their companies. Essentially, dividends is what we're going to be tracking down. I'm going to show you on Robinhood how it looks and how I pick them. Like I said, I'm not your stock investor or your stockbroker, so follow me at your own risk. These are things that I'm going to invest in myself over time and grow the account. Now, the yield is just a percentage return of an asset paid over 1 year. So the yield essentially, it's pretty simple. Let's say you have $100 invested into a company. If they paid you back $2.60, you've essentially made 2.6% yield. That company has a 2.6% yield. Now, dividend yield, the way that is calculated is pretty simple. It's a dividend payout divided by the price of the stock, and then you multiply that by 100. So essentially, if a stock over the last year paid you 78 cents and the stock's price is $30, you would take that 78 cents, divide that by 30, and the amount that you get, you multiply that by 100, which will give you that 2.6 that I talked about earlier. Now, the easier way to do it is essentially if you have $100, for every $100 you have invested in this company here, you would make $2.60. So if you have $100 invested in said company, you'd make $2.60. If you have $1,000 or if you have $10,000, you would make essentially $260, which is how people make good money investing in dividend stocks. The more money you have in the account, the more money you'll make from having a dividend account. Now, without further ado, please follow along for the video showing how I invested the second $100, and go back to the previous video to watch how I invested the first $100. The standout money that you saw before was just the money I left into Dogecoin, just in case, it lands on the moon.
All right, let's get straight into it. So here, before we even get started, what you want to do is set up those reoccurring investments from your dividends, so that instead of having dividends paid out to your as cash, it'll just reinvest into the company. That is essentially one of the things that I covered in the video that I'm going to put above. What that does is it creates compound interest on the dividends that you yield. So here you see how it works. Essentially, when you get a dividend payout, instead of you having to figure out where you're going to put it, it'll just go right back into the company and buy you more share, whether it be a portion share or a full share. You could pause this feature at any time, so it's not like you have to do anything and you're stuck when you sign up. So obviously, after you learn how it works, scroll down, accept, and we are good to go. All right, so you see the 151 from previous. The first thing we're gonna do here is deposit that $100 that we're gonna use to build our dividend heavy portfolio. All right, so good thing I've always paid them, so my instant deposit hits. Now we go back and what we're gonna do is build. So we have the 2 stocks that we had previously. Now what I like to do is to have a minimum of 10 shares or $100 invested into a stock. Now obviously, since we're only depositing $100, I'm gonna build that up over time. Now I already had 6 shares of this, so 4 more gets me to that 10, and we're gonna let this go. These 2 stocks that we bought previously have been performing very well, so I decided I'm gonna beef that up. Now this is just to show you the dividend stocks that I found that have credibility behind it. You can never go wrong with having a share of Coke. I think there's a study out there that if you bought a share of Coke in like 1960, right now you'd probably be like a millionaire or something. But obviously we weren't born in 1960, so we don't have that luxury. Going back, you see all the rest of the stocks. Just it's lined up based on the cheapest to most expensive. S&P 500 ETF. This just stocks the 500 most valued stocks. Essentially, it's one of my favorite once day trade. I think once our profile is built up, or once our portfolio is built up, I'll go back and buy a share of that just because of the constant growth it has. Now, Carnival is a cruise line, and I think with COVID being lifted, this will probably triple over time. So I figured get 2 shares here since I have about $67 left, and build that up every time until we get to either 10 shares or $100, whatever I feel will be a great investment at different times. So we got those 2 shares. We have about $6 or $7 left. What I'm going to do is go back to the most affordable one of the 3 stocks, which is the one I haven't put money back into yet. And what we're going to do, instead of buying in shares, we're going to buy in dollar. We're going to use the whole 628 because I feel it's best when all your money is working for you rather than having some buying power left over. Now, that is exactly how we plan on using this week's $100. So what I'm going to do here is just go back to show you some of the track record. The past week, we've made a very big jump based on those 2 shares that I bought, or 2 stocks that I bought previously. And this just shows you my past activity in the last year. Obviously, I took out that money, so it's not there anymore. That concludes the video. Please like, share, and subscribe to the channel.